Hey folks, welcome back to the channel. This video is going to show you risk reduction and profit taking in the stock market. This is arguably the most important topic you're going to need to understand in order to protect yourself while trading. It was suggested to me by 10th Media, and this is so important, right? If you do not go into a trade with a plan, you are setting yourself up for failure. If you follow any professional traders on Twitter or in a Discord, you're going to see them say, trade your own plan, manage your own risk. If you were managing your own risk, you wouldn't be complaining right now. This is showing you, I'm going to show you what they mean, right? They might not be doing exactly what we're doing here, because I sometimes even change up my numbers here. But this is very similar to what traders do in order to protect themselves, lower their break-evens, and lock in profits. And then we're also going to talk about what to do with those profits once you get them. So let's focus on our top position here, ARO, right? We have 1,000 shares at $6.70, total cost of $6,700. Let's say we've been waiting for a pop. We get a pop of 25% above our cost basis. To me, I see 25% and I want to take profits. Others that I know say, okay, we're up 25%. That's just the start of the run. We could get to 50, we could get to 75. And I think 100% is available to us in a couple of weeks here. That might happen, right? And you would, let's just say it does happen. You pop to 100% within a week. You're going to feel dumb that you took out profits at 25%, right? Wrong. You should always feel smart that you took out profits, because that 100% pop was not guaranteed. It never is. If you're taking profits strategically, you're protecting yourself along the way. You're pretty much funding your own insurance policy, like I like to think about it. So we get our 25% pop on ARO. We sell out 200 shares. We lock profits of $335. Our new total cost in the market, our new total amount in the market is $5,360. Our new break-even total cost is $5,025. That's coming from us locking in $335 of profit, right? If we were to take a proportion of what 5,025 is of 5,360, be about 93%. So calculating what our new cost even is going to be based off of that, we would have a new break even of $6.28. So if we got a pop of 25% to $8.38 on ARO, the stock would have to go to $6.28 for us to break even on this trade, since we have locked profits. If we did not lock profits, our break even would have remained $6.70. Lowering your break even is going to allow you less risk, right? It's going to allow you to feel more comfortable. It allows you to open your mind to other positions as well with this profit that you've gained, right? You could do one of two things here. You could take that profit, keep it as cash balance or dry powder, and look for other positions, right? Strategically wait for a perfect dip on another stock and maybe a sector that's not as hot right now. You could wait for a dip in this same stock, right? So if it goes up to 25% to 838, let's just say it consolidates down to 690, right? You could throw that same 335 back in, or that 20% position that you took out, you could throw that back in as well. All the while you're lowering your break even, right? We hop down to the second table here. We get another pop to 40%. We're now sitting at $9.38. We sell another 20% of our position. We lock in $536 of profit. Our new break even is $5.81, right? So if we look at this on a chart, our cost basis here at the start is around here. We're selling out 20% here, 20% here. This actually could be increased a little bit. And now your new break-even price is $5.81. So that is here, right? The key support level even, but you're all the way up here. Now, ARO in this chart is not a great example because this is a huge pop, right? So if you're up 40, 50% on a day, you might end up selling a little more up here as well. If we hop back to the chart, let's just say that pop never happened. And 2-3 weeks later, we get another increase and our position is up 80%. Guess what? I'm surgically taking out another 20%, locking in $1,000 profit now, 1,072. Our new break even is $4.02. I would even feel comfortable letting this ride, trying to get another 20, 30, 40% before I take more profits, right? You're at $4 break even. There's a very small window for it to get back to $4. Even the extreme market weakness that we saw last week brought it down to $4.55. You still would have been green on this swing. That gives you the confidence to say, you know what? I think it's turning around. Look at this bullish hammer candle. You could throw in more at $5.60, right? You have a lot of profits locked in on this position. You could either throw it right back in, and that's how you get some compounding going on, or you could keep it, like I said earlier, as dry powder and be looking at the same sector, so this EV sector and other stocks that are better positioned and throw the profits into there. Or you could be throwing it into a completely different sector and building your portfolio in that sector, right? The name of the game with using these formulas and making sure you strategically take profits is longevity. Yes, you will hit home runs. They will come few and far in between. When they happen, be grateful, take your profits and move on, right? But if you're looking to have long-term positions and trade around a core, like Brady always mentions, this is a good method to do it. Every time you sort of get a pop, you take your profits, you wait for consolidation, you throw them back in. You could be trading the same couple stocks all year, taking profits, throwing it back in on dips. That's how you get a compounded portfolio. Now, like I said, the only way this works is if you are strategic and surgical about this. You can't think that one stock is different than the other and one has further to go. And I know I say that when I analyze the stocks, but I'm still scaling out, right? So I'm still keeping my cost basis 80% rule in play and taking my profits when they're available. The only way that you're going to protect yourself and last in the market is if you are looking out for yourself. No professional trader is going to do that for you. That's where these formulas and these charts come in. Keep a journal. Make sure that you are following your own rules. I'm going to take this chart, post it on my Twitter. The formulas are already here. You could pretty much plug and play this. Like I said, it's not exactly what I do in every scenario. I have used this exact position scale out and cost basis increase multiple times before. For me, it depends on sector of what I know about the stock, the volatility of it, the personality of the stock. But feel free to use this chart, play with the numbers, make sure you feel comfortable seeing how these numbers interact and try to understand how you're going to feel with that new break even level. Use your charts, back test. Like I just showed you, we'd be selling out here, selling out here. Make sure that you're comfortable, right? Because what's comfortable for me or somebody who's been trading for 20 years is not going to be comfortable for you if this is your first month, right? Use this as a starting place. I will be available on Twitter or YouTube for any questions in the comments on the video, in my DMs on Twitter. I want to make sure that you're protected trading in the market, right? As always, thanks for watching this video. If you liked it, make sure you hit the thumbs up button on YouTube, subscribe to my channel, follow me on Twitter. If you had a friend that or just recently watched the position go up from up 100% to 0% up, right? Or negative 20%, send them this video.